With March shifting into April leading into Easter weekend, it could be a tricky week to navigate for the global markets, especially with the bond price wobbles that have started to greet month ends. Things have arguably become more difficult thanks to the Archegos capital situation. Friday saw significant losses for Viacom, CBS, Discovery, and a selection of Chinese tech stocks without immediate explanation. Over the weekend, it was then revealed that a margin call hit Archegos was behind the selling, leading to warnings of significant losses from Credit Suisse and Nomura on Monday morning. It's unclear whether Archegos is done with its fire sales, and if it isn't, how much it has left to unload. It also raises questions over the wider ramifications of the hedge fund's troubles and which companies will be next to announce they have been stung. As for business as usual, the US is busier than most this week, doing a 5-day shift instead of the 4 days over in Europe, culminating in Friday's non-farms jobs report. The figures covering February were surprisingly stellar. Instead of the 197,000 forecast, 379,000 jobs were added across the month, the highest figure since those covering October. The unemployment rate also beat estimates for the 11th month running, dropping from 6.3% to 6.2%. The one outlier was everyday hourly earnings, which remained stubbornly low, even as it rose from 0.1% to 0.2%, and that's only thanks to a downwards revision to January's data anyway. As for March, analysts are hoping that non-farm number will keep climbing, with expectations of 500,000 new jobs added. If true, that would surpass February to become the best reading since October. We could also start to see the benefit of the optimism generated by the passing of the stimulus plan in March. So that might be in play in terms of how the figures pan out on Friday. The unemployment rate is also expected to see another slight retreat, down to 6.1%, but with the average hourly earnings again stagnant at 0.2%. Before Friday's jobs data, there's a steady run of worthwhile figures, in the run-up. On Tuesday, the CB consumer confidence figure is set to see a really sharp jump from 91.3 to 96.0. Wednesday's ADP non-farm unemployment change reading is set to potentially back up that 500,000 official reading on Friday. It's expected at a 6-month high of 557,000, while the Chicago PMI is looking to rise from 59.5 to 6.0. The pending home sales numbers are set to improve from minus 2.8% to minus 2.6%. Thursday, finally, has the market and ISM manufacturing PMIs. The final figure for the former is expected at 59.0, while the latter is hoping to climb from 60.8 to 60.1, which would be the highest number since September 2018. The Dow Jones is currently teetering around the 30,000 mark. One final push this week could see it close March at an all-time high and enter April with its best foot forwards. The Archegos situation arguably complicates that, however, and I think investors will want to wait and see how Monday and Tuesday pan out in terms of any other companies announcing that they've been impacted by the hedge funds sell-off before they'd necessarily feel comfortable in pushing the Dow Jones to above 33,200, which I think is roughly its all-time high at present.